Hi, this is Bill Burns with eXp Realty in Charlotte, and I want to thank you for joining us today. I've got Terry with Fairway today to help us answer some questions on the new tax law.
Hey
Terry?
Bill, how you doing?
Good, man. How are you?
Good, thanks for having me.
Good. So, Terry, getting a lot of questions on how the new tax laws affect the purchase of real estate, and I thought maybe you could just hit the highlights and help some of our viewers
Right, we can do that.
understand how that is going to affect them this year.
Absolutely. So first and foremost, I want to say that I'm not a tax expert, not a CPA. So, definitely make sure you align yourself this year with a CPA for any of the tax changes to see how they might benefit you.
Right.
The new tax information is not for the 2017 filing, which we're doing now. It's for 2018 filing, which we'll do at the beginning of 2019. And the biggest question I get is mortgage interest still tax deductible? And
Right.
yes, it is. They did lower the acquisition debt to $750,000 from $1 million. So the interest that you pay on debt up to $750,000 can be tax deductible.
Good news.
The other good piece of news with that is home equity debt can be tax deductible if you use that debt to purchase the house. A lot of times you'll see people that'll use a first and a second to purchase a home. In that
Right.
case, the home equity debt can be tax deductible. Now,
That's good.
the reverse of that, the negative news is they did cut out the deduction for home equity debt. If you own your house and you take a home equity line later, to make some additions or buy a car, pay off credit debt, that
Renovation work.
that interest
Yeah.
is at this point no longer tax deductible.
Okay.
The other piece of it, as far as mortgage is concerned, or another large piece, is the MCC credit, which we had heard near the end of the year was going to be wiped out. That credit is still in play. We use that if you're a first-time home buyer. You can get an interest credit up to $2,000 towards your taxes. It helps us with debt-to-income ratio. It helps us lower that in some cases when you have a new borrower purchasing a home.
Right. So they can still take advantage of that if they're first-time home buyers.
That's right. Absolutely.
Yeah, that's good news.
And again, like I say, I'm not a tax expert. I read just like everybody else does. Make sure you align yourself with a CPA when you start doing your taxes. Not only next year, do it this year as well, so you can be planning with an expert in the field. If you need a CPA, if you don't have anybody you work with, please reach out to me. I can help you. I work with a lot of CPAs in a lot of different areas, so I can hook you up with somebody that's gonna do you right and make it beneficial for you.
Great. Well, thanks, Terry. Those are answering a lot of the questions that I've been receiving lately. And if there's something else that you have a concern about, feel free to reach out to me or Terry. Just reply to this video, email, and we'll be happy to answer your specific questions. Thanks again for joining us today.
Have
Thanks,
a great
Terry.
day.
Bye.